Hello there. I hope that you're doing well. During today's lecture, I will teach you navigating the weekly cycles and framing high probability trade setups within them. Most of you look for patterns within price action. However, you need to understand that in order for there to be high probability trade setups, you need to align yourself with the weekly cycle. That is what I will show to you during today's lecture. Here we are on the hourly chart of Nasdaq, and as you can see, this is a blank chart. During this lecture, I will share with you how I was able to buy the low of the day on Tuesday, right here, how I was able to buy the low of the morning session on Wednesday, right here, how I was able to anticipate Thursday's repricing lower, and I will share with you why I did not trade it, and I will share with you how I was able to participate in Friday's beautiful low resistance security run towards the upside. Here I bought the low of the regular trading hours. I know this all probably sounds way too good to be true, but I literally posted the recordings of all these trades on my public YouTube channel, where you can literally see me go into the marketplace and draw lines and predict the future. So with that being said, enjoy this lecture because I will share with you what leads to a high probability trade setup based on the weekly cycle. The majority of you are looking for patterns within price action. All you do is look for a breaker or an imbalance. But let me tell you something. There's way more precision that can be achieved. That precision can be found in knowing what determines a trade setup to be high probable. Every single high probability trade setup contains the following two variables. First of all, there's a higher time frame analysis. There's a higher time frame reasoning for why something should occur. Secondly, there is a underlying manipulation against the overall idea of where the market should be drawn towards. Meaning, we look for manipulation into the opposing side of our drawing liquidity. So if we're bullish, we're looking for the market to go lower. If we're bearish, we're looking for the market to first go higher before it will go lower. And that right there is what I will show to you during this lecture. Here I've added some annotations to the chart. As you can see, I have annotated the previous week's high right here and the previous week's low. Below the previous week's low, sell side liquidity is resting, and above the previous week's high, buy side liquidity is resting. The reason why I'm paying attention to this high and low is because when a new week opens up, the first two reference points that I have are the previous week's high and the previous week's low. Secondly, what you can see that I've annotated is the new week opening gap. The new week opening gap is the difference between the Friday close and the Sunday open. The reason why I'm paying attention to this gap right here is because it gives me an underlying idea for the order flow for this current week. As long as we do not displace below it, I'm anticipating higher prices. That was my analysis for the past week. But there was a more specific price range which I was paying attention to. This range was below this new week opening gap. The range that I was paying attention to was this hourly BC. The reason why I was paying attention to this hourly BC was due to the fact that this hourly BC was the lowest imbalance inside of this sequence of imbalances that formed during the creation of the previous week high right here. Therefore, as long as the market does not displace below this hourly BC, I'm leaning towards the upside. That is how I was able to frame the idea of Tuesday's low of day right here. I've already broken down this trade on my YouTube channel. I've created a lecture about it. I would highly advise you to watch that lecture after having watched this lecture, because during that lecture I share with you the fine details that led me to believe that this would be the low of day on Tuesday and why I held on to my position all the way towards the previous day high. If we drop into the lower time frames, what we saw occur on Monday was that the market dropped lower into this lower REBC right here. But what I want you to see is how slow this repricing lower was. Do you see how much back and forth going there was? On the lower time frames, you're going to see that a lot of bearish trend lines can be drawn. Therefore, we can anticipate that retail-minded traders are looking at this as signs of weakness. We, however, know that this is a previous daily high which has been engineered below the previous week high. These highs are too clean. Therefore, I anticipate them to be made jagged when the time is right. On Tuesday, we had 10 AM high impact news. Meaning, I was anticipating that after 10 a.m., we would likely see big green candles towards the upside, drawing towards that previous day high and drawing towards that previous week high. What I was waiting for was manipulation towards the downside into my point of interest so that we could then distribute afterwards. Now, what I want you to understand is that if we drop into the lower time frames, you will see a run lower followed by displacement towards the upside, followed by a quick expansion higher, as you can see here. This is so important to understand, guys. You need to understand that in order for us to go higher, to draw towards these relative vehicle highs, we must first go lower, and that is what you see right here. But we can even fractalize this logic by paying attention to the most important opening time, which is the 9:30 opening time. Here we are on the 1 minute time frame, and what you can see is that from 9:30 we initially run higher, take out buy-side liquidity resting above this high and the previous cycle high, and we then see the market suddenly drop towards the downside. Do you see this sequence of down close candles right here? Imagine what every single retail minded trader would think when they see these down close candles right here. They would think to themselves, the time is finally here. The crash is here. We need to be on board. I need to go market short because else I'm going to miss out on this expansion towards the downside. We of course know, however, that the opposing is true. Why? Because we know that the draw liquidity is above market price. We are bullish for the day. Therefore, we anticipate that IPDA will seek to reprice lower, to manipulate lower before it can go higher. That is what I want you to see right here. This manipulation lower is the reason why we saw the distribution towards the upside taking place. And when you recognize manipulation, when you recognize that a low has formed, that the smart money reversal has taken place like it has here, when you can recognize that, every single discount array which will form afterwards can be used for a potential long opportunity as long as it gets utilized properly when it comes to utilizing the overall range that we're trading in. Meaning, this BC, for example, right here was a potential longing opportunity. Why this BC and why not this BC? Because if you look at the range from low to high, you will see that this BC right here was in a discount. Now, if we pay attention to what occurred after Nasdaq repriced above the previous week high, you can see the following. On the left, you can see Nasdaq, and on the right, you can see ES. What you can see is that Nasdaq repriced above the previous week high later on during the Tuesday Asia session. Now, what I want you to see, however, on ES is that ES never traded above this black line, which represents the previous week high. Therefore, there was a cracking correlation between Nasdaq and ES. Nasdaq made a higher high relative to the previous week high, whilst ES created a lower high, and that is SMT. Notice that there was also SMT relative to this high right here, which was the Friday high. Now, the reason why this is so important is because that cracking correlation is taking place on Tuesday, and we have taken out key buy-side liquidity objectives, and we have a lot of sell-side liquidity engineered. Going into the day of Wednesday, what I was then monitoring was the following. I was monitoring how Nasdaq would react off this previous week high. What I then saw occur was the following. I saw Nasdaq reprice lower aggressively, trading below this previous week's high price level. Therefore, I knew that because we had that SMT as well, that we could have potentially formed the high of week right here. This was, however, not confirmed just yet. Therefore, when I saw Nasdaq reprice into this RLEBC, which formed in a discount of the range from this low to this high, I was anticipating some form of reaction from this level right here. And that level, that range, got reached at the right time. What do you see occur? You see this large wick get established, and therefore on the lower time frames what you will see is a buy program unfolding. I want you to keep in mind that this is an RLEBC right here when we drop into the lower time frames. Again, keep in mind as well that in order for us to go higher, we must first go lower. If we pay attention to the 1 minute chart then, what I want you to see is that from the 9:30 open, I have annotated the delivery towards the downside which took place. What I want you to see is that initially after 9:30, we form this high and then the market begins to drop lower. We can see these big down close candles take place, trading into that hourly BC. What I want you to understand is that, again, the same concept of 930 manipulation followed by distribution can be applied here. Because we see that these big down close candles create the idea of weakness. They create the idea of we're gonna fall, we're gonna just continue to roll over, we're just going to crash, so to say. You see multiple down close candles in a sequence form right here, and that right there is what I want you to be able to train your eye to see. Because you need to understand that before every single smart money reversal, we want to see this right here take place. This is an algorithmic signature because it traps people into believing that lower prices are next, whilst in reality, we're nearing a turning point where we're going from sell program to buy program. This gets confirmed the moment that price displaces away from that hourly BC again. Pay attention to the direction to this level right here. I went long the moment that Nasdaq retraced into this level right here. Guys, this is to the tick. Go into your own charts and investigate. Pay attention to the level of precision. You now understand why the market also leaves this BC unfilled. There's no reason for it to retrace into it because on the lower time frames, the price range has already been balanced. Now, what I want you to see is that the market then beautifully expands higher. New imbalance forms right here. That was again a buying opportunity. But why are these imbalances functioning as support on price? Because we already saw manipulation lower into a key level, that hourly imbalance, at the right time after 930. And we can anticipate, therefore, that we're likely going to target buy-side liquidity, which is resting above these highs next. If we pay attention then to what occurred afterwards, we saw the market displace through this hourly BC. Notice that when we closed outside of that hourly BC, we also began closing below that new week opening gap and below that initial hourly BC, which I had outlined to be the range to monitor. I shared with you that as long as we do not displace below it, I'm anticipating higher prices. What do you see? You see us displace through that hourly BC with this CB. The market retraces into that hourly CB, into the price range of that old hourly BC that functions as an inversion for value gap, and you then see the market begin to expand towards the downside. It begins to roll over. This right here is an algorithmic signature that signals to you that we're likely going to be drawing towards the opposing side of the range. What range are we operating in? The range that we were operating in was the previous week's range. We purged the previous week's high, and now we can anticipate a revert to take place towards the previous week's low. That is why on the mentorship form, I posted that I'm anticipating Nasdaq to draw towards the previous week's low unless it displaces back above this BC. And that is why I shared what I shared in advance of both the London as the New York morning session. Even though I knew that we would likely draw towards the previous week's low, I decided not to look to take any setups on Thursday. The reason why was due to the fact that it was the day in advance of NFP. And the day in advance of NFP for me is always a no trading day. And that is why I decided to not even look at the live markets on Thursday. Am I upset about the fact that I missed out on Thursday's expansion towards the previous week's low? No. Why not? Because I know that there will be a new opportunity always. And that is how you saw me trade on Friday from the low of the regular trading hours. And that is what I want you to understand. There are so many opportunities each week if you understand time and price correctly. The only logical thing for the market to do now was to roll over. Because we already ran out buy-side liquidity resting above their previous week high. We saw SMT and we saw all these signatures that confirmed to us that bearish order flow was in play. The next logical sell-side liquidity objective then is the previous week's low. Now what will we be looking for? We will be looking for an expansion lower, followed by a retracement, followed by an expansion towards the previous week's low. But what do you see right here? You see the market engineer relative weak lows prior to this retracement into this up-close candle, its respective low. Why is this so significant? Because you need to understand that below these relative weak lows, sell-side liquidity is being engineered. Every retail miner trader will look at these relative weak lows and at this minor push higher as, oh, We're very bullish now on Nasdaq. The bottom is in. It's time to go long. The weekly low has formed. That's the thought process. We, however, know that the market won't turn around until this previous week's low has been met. Therefore, we will anticipate a retracement followed by a continuation. This right here, this fractal, is a lower time frame market maker sell model because we expanded towards the downside, we displaced through this low, and therefore we anticipate that IPDA will seek to retrace into this low, offer buy side to then continue trying towards the downside. And this right here is a beautiful lower time frame market maker sell model. If we pay attention to the 1 minute chart then, what I want you to see is the following. During London, that consolidation took place, during which relative weak lows were engineered. This is very important that it occurs during London. New York opens up and we immediately begin to run towards that low which I shared with you on the hourly chart. Notice that when we reach this low, the market began to go back and forth for a moment. And this occurred above that price level. 830 comes along. What does 830 do? 830 takes out the previous cycle high, and we then see the market continue the consolidation profile, where we're just hanging around. But notice that at this moment in time, something very crucial is occurring. During the macro window, what we begin to see occur is that premium rates begin to function as resistance on price. Meaning, we begin to see that the market is beginning to roll over. Why is this important? Because the higher time frame analysis is suggesting to us that lower prices should be next. Therefore, we anticipate that during our macro windows, we're likely going to see signs of a sell program taking place. Now, what I want you to see then is the following. What I want you to see then is that if we apply the logic which I described prior during this lecture, of that we need to see manipulation higher before we can go lower to this delivery, you can see that during London, the market consolidated. New York opens up at 7 a.m. This is the first 90-minute cycle from 7 to 8:30. And we see the market immediately begin to run towards the upside into that key level, which is that hourly low, which I outlined. That right there is manipulation which is taking place, meaning we begin to see the market manipulate higher, and therefore we can anticipate that distribution will come. When is the distribution likely going to come? The distribution is likely going to come from 9:30. So what you see right here is that in advance of 9:30, there was a shorting opportunity right here, where we displaced lower, creating this CB, and we see the market retrace into that CB. IOFET is taking place. This is the market structure shift pattern as well, if you pay attention. And we see the market expand lower when 9:30 opens up. Why did 9:30 expand lower and why did it not manipulate higher, you might be wondering? Because it already did the manipulation prior to the 9:30 open. 8:30 was the manipulation because we took out the previous cycle high right here. Therefore, you can anticipate 9:30 to be sudden and to be explosive, so to say. We see the market reprice below this sell-side liquidity, below that London low, and here something interesting occurs. Remember how I explained to you that time cycles always do one or two things when the high or low of a previous cycle gets taken out. It's either a purge and revert, as we saw take place right here at 8:30, where we purged the previous cycle high and then reverted towards the previous cycle low, or it's the continuation model, where we trade below a previous cycle low and it begins to function as resistance on price. That is what you see right here. Notice that we displace below this down close candle, which I've annotated in red. We retrace into that down close candle, the London low, and we never see the market displace above it again. Instead, it functions beautifully as resistance on price. Surely, you see this wick go above the range, but notice how the bodies keep on closing inside of it. That right there is an algorithmic signature which signals to you that the continuation towards the downside is likely going to come soon. The market begins to roll over and we see it run towards the downside, drawing towards that previous week low next. Now, even though this was the day in advance of NFP, this was a very clean day when it came to the AMD fractals present, and I kindly suggest you to investigate the delivery which took place. Now, if we pay attention to the final day of the week, Friday then, what I want you to see is the following. What I want you to see is that on Friday, I was anticipating this range right here, this CB, which formed on Thursday, to be the range to monitor. Here you can see my post, which I shared in advance of the trading day, in which I outlined this to be my range to monitor. Notice that when I shared that, however, the market was in this area. What that meant was that I was anticipating that we would likely see a run higher taking place into that RECB. The reason why was due to the fact that on the Thursday low, I want you to investigate into market relationship. I want you to pay attention to when Nasdaq formed the low of day and when ES formed the low of day. At 9:30, we saw the market begin to expand towards the upside and it began to draw towards this RECB right here. Notice that when we reached CE 50% of that RECB, you see that the market formed the high of day there before retracing into the daily range. Now, what is so important to understand is the following. What is so important to understand is that the whole logic of Friday trading into this RECB was based on the underlying belief that Thursday formed the low of week. And the reason why was due to the fact that we reached our weekly objective on the downside, the previous week's low. We saw SMT take place. Yep, if you investigate Nasdaq and TS, you will see. We saw SMT take place below the previous week low. Therefore, I anticipate that we're likely going to draw towards that RECB next. And the reason why I'm paying attention to these fine details within my analysis is because I need you to understand that it's exactly inside of these details that you will see the algorithmic precision take place. Because I've just framed the idea of we're likely going to draw towards this RECB. Therefore, we will look at the lower time frames to confirm that to us. If we pay attention to the 1 minute time frame then, what I want you to see is that I've annotated the NFP low. At 8:30 a.m., NFP was delivered. NFP wasn't as explosive as I thought it would be. There wasn't as much volatility as I thought there would be. And instead, we saw just this very minor repricing taking place. Nevertheless, I still pay attention to the NFP low and the NFP high. Notice that we initially take out the NFP high right here, and the market slowly begins to draw towards the downside. It slowly begins to go back and forth towards the downside. Remember what I outlined about Monday's delivery? What I want you to understand is that on Monday we saw a lot of back and forth going taking place towards the downside. Therefore, a lot of trendline liquidity is being engineered in the form of buy-side liquidity. Now, I want you to understand that concept can be applied to this delivery towards the downside as well, where you can clearly see this very slow repricing lower. I can draw a trend line from this high all the way across these highs, and you can see that there's a clear trend line which a retail miner trader would look like and establish a bearish idea based upon. That is what I'm looking for. I'm looking for that idea of the masses. When I then saw the market take out the NFP low right here, and I saw 9:30 open low, I knew that the time was right for the market to begin to expand higher soon. I went long based off a lower time frame fractal right here on the 15-second chart, and I began to see bullish arrays get created, and we saw a beautiful run higher taking place. Eventually, the market reached this buy-side liquidity objective, which was a previous 30-minute cycle high. After this high was taken out, we saw some back and forth price action taking place because at 10 o'clock there was high impact news. What then occurred was the following. What occurred was that the market retraced towards the downside and I got taken out at this exact low formation before the final run higher took place into my drawing liquidity. And that was unfortunate, but it is what it is. I was happy with the run towards the buy-side liquidity objective right here. It was a very solid move within a short period of time, and that was my day done. Could I have managed this position better? Yes, because my stop could have been trailed below this low to play the safer route, but I was not happy with how long it took for the market to begin to accelerate right here. But at the end of the day, I'm human, I make mistakes, and it is what it is. But what I want you to understand, guys, is the following. I want you to understand that what I just described during this lecture was the following. I framed based upon an hourly chart, literally the lower time frame delivery. On the lower time frame delivery, what I looked for was manipulation taking place. Meaning I was looking for manipulation against my higher time frame idea, against my hourly idea. Meaning if I was bullish on the hourly time frame, I was looking for manipulation against my bullish idea, meaning manipulation lower so that we could then distribute higher. For the idea of lower prices on Thursday, I want to see manipulation higher before we could see distribution lower. And that is what I want you to take away from this lecture. So with that being said, this lecture comes to an end. I hope that you found it insightful. If you did, please let me know in the comments. I want to wish you a very nice day and good luck with your studies. Be safe.